Thank you for joining me. I'm Alex and I want to talk about Adobe. So what they do is they made the Flash player, which I'm really happy is dead. Also, you may have heard of Photoshop or, any of their video editing softwares and other stuff. They do a lot of stuff. Current price $472, which gives them a market cap of $226 billion. There's currently no dividend. I would honestly not be surprised if they started paying one, but I think it's not really justified to bet on them doing that. Revenue $12.9 billion, which is slightly up. Earnings $5.3 billion, which is up a lot. And the $3 billion was fairly consistent from the previous year, which was also almost double the year before that. So earnings growth is actually going pretty well. I think their subscription model for their creative suite and everything is doing much better than the sales model they had before that. So things seem to be going in the right direction and quickly. A PE of 44 is still very high. Forward PE of 42 also high, means that earnings are going to be fairly consistent. I would expect a slightly lower forward PE if things were going in the right direction quickly and kind of to justify the stock price. Total assets $24.3 billion, total liabilities $11 billion, which gives them a total stockholders' equity of $13.3 billion, and I really like this balance sheet. Slightly over 2-to-1 assets to liabilities ratio, and I mean, it's not really in any relation to the stock price. Market cap $226 billion, stockholders equity $13 billion. Obviously, there's quite a bit of a gap there, but the balance sheet as a whole looks pretty amazing. As far as risk factors go, obviously there's free software out there, and free software has been becoming more and more popular. So obviously if there's free programs that can do whatever $50 per month software can do, then that's going to be a threat. Overall, it doesn't seem to be hurting them that much, as you can see from the earnings growth. So I don't really see any huge risk factors here. I don't see any huge new company entering the market or any huge company entering this market. So overall, I don't think that there's any major risk factors to consider here. So obviously, for a growth investor, the revenue growth is not quite where it needs to be. For a dividend investor, obviously, there's no dividend, so there's nothing to see here. And for a value investor, the balance sheet looks pretty amazing. Earnings growth is pretty sweet. Talking about last year, not the coming year, but the PE is just way too high. So I don't think it's going to be a bad investment necessarily, but I think that there's definitely better opportunities out there. So I don't think I would ever recommend a PE of 44 to a value investor. So I think that value investors would be better suited to just look elsewhere for now and maybe reevaluate if either the stock price goes down or the earnings go up significantly again. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.